It looks like it's 5 o'clock, so to be respectful of everybody's time, we'll go ahead and let you get going. Um, we really appreciate you doing this, Diane. I'm going to let you introduce yourself and your business, and we can get the webinar. We really appreciate this. And as you stated before, just to let everybody know, if you have any questions during the webinar, she is more than happy to be interrupted, and we'll try to answer your questions as best that she can. So go ahead, Diane. I'll let you introduce yourself and get going.
All right, thank you, Shane. As you can see, I'm Diane Buchli. I am logged in twice, once so that you can see my paperwork, and once so you can see me. As Shane said, I do better feeding off of people when I'm in a situation like this. So if anybody has any questions, please stop my rambling and ask the questions, and I will, like Shane said, do the best I can to answer them. My company is ProAcct Financial, and we are a bookkeeping, payroll, tax prep company here in Fulton. So all of my little handouts that you don't get handed out have my information at the top, and anybody is free to contact me if you want my phone number or anything like that. Of course, I will be happy to give that information to you. Let's see. I do see we have Brittany, Danny, Denise, and Courtney. Hi, best friend. Courtney's my new best friend. So I will begin what we're going to talk about this evening, which is budgeting for a business and financial statements for a business and why they're important. And if we have time, if I just blow through all of this quickly and we have time, I'll also talk about some taxes for business, things you can deduct on taxes, tax structuring for business, and I'll try to remember to look at my iPad because I keep looking at my computer so I can see everybody. Sorry about that. First, I wanted to talk to you about when you're looking at budgeting for a business. I don't know if you already have businesses or if you're looking to start a business. A very good tool to begin with, though, is a business plan. And I know that there are a number of online places that you can go to create a business plan. I use Life Plan. It is relatively inexpensive. And I know that there are other places that through the chamber that use Life Plan as well. The reason I would recommend doing that, there's a couple different reasons, but first of all, you need to know what you're getting into before you get into it when you're starting a business. And the best way to do that is to look at things ahead of time before you're actually into the middle of it. If you know before you get there what you're going to be coming up against, which is what a plan, the business plan will help you find out. You'll be looking for business expenses and what the income is and the type of business you're going to be starting, and it leads you through the process of setting up. This is my business statement. This is why I'm doing what I'm doing. This is how I'm going to do it. This is the time frame I'm going to do it in. These are the things that I need to be able to do it. This is what they cost. And the business plan walks you through doing all of those things. So that's the very first thing is I would recommend investing a little bit of money into something like that. If you don't have the money to invest into something like that, I'm sure that you can do it all on your own. It's just going to take a little bit more legwork and a little bit more time on the computer looking things up to find out how to do it. Everything I'm going to tell you tonight, you can look up on the computer and find for yourself. I'm not going to give you any startling revelations or secrets of the business. This is all things that you can find out for yourself. So you've gone on the Life Plan and you've begun your business plan, and it wants to know what your startup costs are going to be in your business plan. So I've given you some examples here, if you can see, and see, I can't see any of you. None of you gave me a picture. I'm a little disappointed. Well, that's not true. Danny, you gave me a picture. If you can see my handout, this is startup costs. We have what startup costs is what the startup costs are, and why they are a little bit different than your regular everyday costs. So your startup costs are going to be things that you aren't necessarily going to be paying for every month, like setting up your logo, fees to have a bookkeeper set up books for you, or maybe you have to do a build out on a building so that it's the way that you want it to be. Those are not things that you would incur every month. Those are very specific beginning a business type of thing. So you have to know what your expenses are going to be for that, and how you're going to pay for that, and what those things mean to you. Because you can go, you can pay $20,000 to put new desks and filing cabinets and computers and all of these things in for your business, but you don't get to take $20,000 off your taxes because these are startup costs. So it's important for you to know the difference between what a startup cost is and what a regular business cost is. Your startup costs are typically incurred before you ever make a penny of income. So that's important to know as well, because how are you going to pay for these things? So you have to budget for your startup costs, which I've given you some examples of expenses. You also need to know, like I said, how you're going to pay for these things. If you're paying for them out of pocket, if you're from your savings, if you're getting loans from somebody, if you are getting investments, if you have private investors. Either way, any of those choices, you need to know where that money's coming from. And then I gave you examples of the expenses. I also gave you some examples of startup assets, which would be the desks and the computers. And those are assets to your company, which means that they are good for your company, but you don't, like I said, you don't get to expense them. So it's important. Those are things that you're going to need to be aware of. Once you get past your startup, you've paid for that, or you finance that, or whatever you have, then you need to be looking at your budgeting of income and expenses, which, I guess I didn't really, I'm going to go ahead and change that slide. When you're budgeting for your income expenses, here's another one that I'm going to tell you. There are, I would guess, probably 1,000 online budgeting tools that you can use. The important part for budgeting your income and expenses is, are you budgeting by month? Are you budgeting by quarter? Are you budgeting annually? Most companies do it by month because it's easier to keep control of your finances if you're looking at them more frequently. So you would have a better reaction time if you're doing it on a monthly basis versus if you're doing it, say, on an annual basis. So, sorry. So when you are looking at your budget, you want to have a budget for your income. You want to have a budget for your fixed costs, and you want to have a budget for your variable costs. Your variable costs are things that fluctuate by the amount of sales that you have. For instance, credit card fees are a variable cost. Cost of goods sold, any product you have to purchase to create what it is you're selling, are a variable cost. Fixed costs are things that you have every month regardless of how much you sell, which would be your rent, your mortgage, your utilities, things like that. So income, variable costs, fixed costs, those are the items that you are going to have in your budget. I will tell you that like I said, you could find them online, but you can also do a very quick, easy budget on Excel that won't take, no cost, no problem. You can do it all yourself right there. If you choose to, now if you're doing it on Excel, if you're doing it on Excel, you have to stay abreast of it, which means that as you incur expenses, you have to continually put them in so that you know where you're at. If you are using a program, for instance, FreshBooks or QuickBooks or something like that, you can put your budget information in and it will keep track of that for you as you pay your bills or put your income in. So that would be a good reason to use a spreadsheet. I'm sorry, that would be a good reason to use a software if you wanted to incur that expense, which QuickBooks Online is relatively inexpensive. They do a monthly fee now. They want everybody online, so they are keeping it relatively inexpensive. Desktop, obviously, I use because that's all I do. I also have clients though that are on QuickBooks Online. So the advantage to QuickBooks Online, I told you, would be it will keep or FreshBooks, whatever, it will keep the budget up to date for you as you enter your income and your expenses. Once you have your budget for your income and expenses set, you know what you're looking to have, that's where and now you're operating, you're running your business. You now have financial statements that are going to be important. And your profit and loss is the first one it's the first one I'll talk about. It's not, I was going to say it's the first one I recommend you make sure you do, but that's not the case. Cash flow is important. All of these three all go together. So you're going to have to be creating all three of them together. Your profit and loss, as you can see on the handout there, it tells you how you're doing, if you're making money and where you're making money or where you're losing money. So if you have, if you made $2,000 in sales last month, but you spent $3,000 in advertising, obviously you've under budgeted your sales or you went way over your budget for advertising. So on a monthly basis, that's what keeps you're like, okay, so I overspent on advertising this month. I know that I need to cut that back for the next month. So you can adjust what you're spending or how much your income is. Oh, I didn't have as many sales as I budgeted that I was going to have, so I need to really double down and get more clients right now to, increase my income. And if you plan, and I'll tell you now, you may not plan on it, but it's probably going to happen anyway. At some point, you're going to go to a bank and say, I need money, whether it's a line of credit for continuing to operate through a slump, whether it is an SBA loan to redo your office, whatever it is, you're going to need financial statements to provide to the banker. And they're going to want your most recent financial statements, and they're going to want your taxes and all of that. So taxes are prepared off of financial statements, so you need to keep them as current as absolutely possible. The next financial statement that we would talk about is the balance sheet. And the balance sheet is a moment in time of how your business is operating. The bank will use it for calculating your debts and calculating how profitable your company is. And there's a bunch of ratios that they can use or they can create off of what your balance sheet says, which I'm not even going to go into because it's nothing that you probably would ever use. If you want that information, again, it's all available online. You can search for financial ratios, and you'll get about a bazillion that will tell you what you may or may not need to know. Oh, look, I wasn't updating my spreadsheets as I talked to you about this. So the profit and loss is real easy. It's just your income minus your expenses, and that tells you whether you're making money. The profit and loss is also the one that your budget will line up against. You've budgeted how much income you're going to have. You've budgeted how much expenses you're going to have in each of these categories, and this is what you'll be comparing it to. So this example is obviously an annual example, and no, it's no company I know. It certainly isn't mine. So your revenue minus your cost of goods sold, which not everyone will have cost of goods sold. That's only if you're providing goods for someone. Retail store or manufacturing will have cost of goods sold. My business is only a service business, so I don't have cost of goods sold. Your other expenses then are your overhead expenses, which are your usual, your accounting, your utilities, your interest expense if you have a mortgage or a loan, and any expenses you incur for business other than manufacturing expenses. So that's the profit and loss. Again, would not be difficult to do this on a spreadsheet if you're not looking to invest in an online website or software. That's what I'm trying to say. Here's your balance sheet, and on your balance sheet, the assets are equal to your liabilities plus your equity. So your assets are the things that your company owns. Your equipment, your furniture, sorry, Danny just joined my phone. Your equipment, your furniture, if you have cars that's owned by the business, things like that, those are your assets. Your liabilities, of course, are your things that you owe. If you owe payroll taxes, if you owe accounts payable, if you owe vendors money, so those are the things that are on your liabilities. And then the equity is what your interest in the business is. If you have fewer liabilities than you have assets, then you have a positive equity in the company, and that's a good thing. If you have more liabilities than you have assets, then you have a negative equity in the company, and that's not a bad thing. It just means you wouldn't be as liable to borrow money as if it were the other way around. All right, the third example of financial statements that I wanted to look at with you was the cash flow statement. Cash flow is very easy to ignore if you're not doing something like this. And I know that everybody's like, well, I don't know how much money I'm going to have in next week. And I'm giving this on this example on a weekly basis. You can do cash flow monthly, you can do cash flow quarterly, but I would recommend actually doing it weekly. It's the best way to stay on top of what you are expecting in and what you are expecting to pay out. And if you know this information, then you can make decisions that you wouldn't be able to make without it. For instance, salesman on the phone says, we've got this really great deal going on right now. If you buy 5 widgets for $100 a piece, normally they're $150, and you're going to need these widgets in the next 6 months, blah, 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 blah. Well, yeah, that's a great savings, but do you have the cash flow to pay for it? And if you're not doing this, then you don't know. So I would really recommend that you keep track of your cash flow. And it really is a guessing game to some extent. I do not know. I know that I'm going to get income from certain clients at certain times of the month. So I know what week of the month I'm getting that income from a client, just because that's when something happens and I know that's when I'm going to get the money. I have other clients that I don't know that. I've sent a bill to them. I don't know when I'm going to get paid, but I'm thinking within the next 30 days. So I'm putting that on my 30 days out, that income is going to be coming in. I'm doing that for every client that I'm expecting money from, and I'm doing that for every expense that I'm expecting to have to pay. Obviously, there will be expenses that you were not anticipating, that you just have to be able to fit those in. So again, though, by doing this, by keeping track of this cash flow statement, you'll be able to be in a better situation to know how you can fit those unexpected expenses in. So really, not a single question? Nobody? Okay. All right. I do want to know that was my quick take on financial statements. Financial statements. You're going to have the profit and loss for the bank. You're going to have the balance sheet for the bank, and you will borrow money at some point. I'd almost guarantee it. Investors, if you have private investors, they're going to want this information also. So these are very important to keep up with. I know you're saying it's what she does for a living. Of course, she's going to say that. But you talk to anybody that's been in business for longer than 3 years, and I will guarantee you they're doing this. They're keeping track of this stuff, and they're looking at it. That's the other thing. It doesn't do you any good to keep track of these things if you don't look at it. And you need to look at it on a regular basis. So whether, it depends on your business, but whether that is weekly, or most people don't do financial statements weekly. So monthly is a regular, that's a good one. Quarterly, depending on the business, perhaps, maybe you're a seasonal business. Annually, definitely. More frequently than annually would be better, but if annually is all you've got, then do annually. All right, I want to know what else you want to talk about. So you guys have to give me some feedback here. Turn off your little mute buttons and tell me, do you want to talk about business entities? Do you want to talk about business taxes? Do you want to talk about sales tax? Do you want to talk about payroll taxes? Do you have any other specific questions that you want to talk about?
I don't have any specific questions, but I like the topic of business taxes.
Okay. Okay, we'll go there. So business taxes depend on what type of a business you are. If you are a sole proprietor, if you are a LLC sole proprietor, then your business taxes are filed on a Schedule C on your personal tax return. If you're a partnership or an S Corp, then you have a separate business tax filing. It is a 1065 for a partnership, an 1120S for an S Corp, that produce K1s that then get put on your personal tax returns. So you're paying personal taxes on that income, but you are also having a separate tax return for that. The only one that has a complete, well, not the only one, but the business tax return that is completely separate is if you have a C Corp and then you are filing 1120S and you are filing in a higher tax rate than on personal taxes. So I don't recommend to many of my clients to go with a C Corp unless they get to a certain level of income and they're looking for much better or much more aggressive separation of business from personal, simply for that reason. The LLC, of course, I said that the sole proprietor LLC would be on your Schedule C. There's also LLCs that you can do a 1120S filing for. which prepares the K-1. And then there's LLCs that you can do a C Corp filing for. So it's just how you set up your LLC and how you register it with the IRS. I'm not sure what you want to know about business taxes. Any business tax that has the K-1, which is the partnership, and the S Corp, and some LLCs they are due on March 15th instead of April 15th. So you have to be aware of that you have to get your taxes done a month early for your business so that you have time to prepare the K-1 and then have it for your personal return. That's why they do that. The Schedule C, obviously, and since it's prepared with the personal return, it's due on April 15th. And the 1120 C Corp, since it is not preparing a different form for the personal return, it's also due on April 15th. Your taxes are your sales. It comes right off your balance sheet, or I'm sorry, right off your profit and loss. It's your sales minus your expenses, and whatever profit you have is what you'll be paying taxes on, with a few exceptions for that. Being meals are not 100% tax deductible. Meals for let me go over here. Meals for clients only. Meals aren't for you. So if you take a client out for very specifically a business meal, then you can deduct 50% of your meals off of that. Now the company will have paid for all of that, but you don't get to deduct all of that. The exception to that is if you're traveling, 100% of your meals while you're traveling are tax deductible. Some other things that you may not have on your profit and loss that would be tax deductible are mileage, if you're taking mileage versus actual. If you're taking actual, then you've paid all of those actual expenses out of your business and you will be taking them off your tax return. But it's still a percentage of miles that you drive, so you still have to keep track of your mileage, just so you know. You need to keep track of all total miles and then business miles. And actual expenses, well, mileage for 2019, I don't remember what it is for 20, and I'm not sure I know the right number for 19. I believe is 54 cents, maybe 54 and a half cents. So it can be quite a large number on your tax return that you don't have in your profit and loss statement. Actual expenses is just what it says. Every oil change, every repair, every tire change, insurance, licensing, all of those expenses are deducted for the percentage of what you're using it for business. So if you're driving 1,000 miles and 200 of it's for business, then you've got that percentage is of those miles is what percentage of the expense you get to use. Something else that would not be on business, your profit and loss, that you may be able to deduct, depending, is as a home office expense. If you have a home office, and the IRS regulations are very, very clear on this. If you have a home office, you get to deduct the square footage of the area that you're using. It's a percentage of the total square footage of your house. You get to deduct your mortgage or rent, your insurance, your real estate taxes, your utilities, maybe a few other things, repair and maintenance to the area that you're using, things like that. You can deduct those, but they have to be 100% used only for business. If you're using that same area to pay your home bills in, then you don't get to use any of it. So a home office is a great little deduction if you can take it. I know very few people that really are that stringent upon keeping their business and their personal separated. That said, I have clients that are taking that deduction. That's all I'm going to say about that. Let's see. I think I hit. Oh, and then there's gifts. Gifts would be on the profit and loss. Oh, one thing I did want to mention also about the home office. If you are doing a C corp or an 1120 S corp, you aren't taking a home office deduction. That's just for an LLC or a partnership that you would be doing that. I'm not even sure about the partnership now that I said that. Maybe not the partnership either. Let's see. And I also had gifts listed there. And again, I just wanted you to be aware that gifts are only for clients. It's not buying your staff a Christmas present. You don't get to deduct that. That's on you. That's not a business expense. Another question that I get a lot about taxes is, especially when you're self-employed, is how much should I be holding back for taxes? And this is the 2020 tax brackets and rates. And I'd be happy to email this out if you guys want to send me your email addresses or whatever, and I'll give you my information before I get off of here. The important thing about this slide is you have to know what your taxable income is. And most people don't know that, because that means if you know that, you're probably doing taxes. And most people don't do taxes. Your taxable income will be your income before taxes are taken out. So your income from your W-2, if you have W-2s, and there's insurance and things like that will come off of there before it's taxed. So that number is important to get off your W-2. It's not going to be the same as what's on your paycheck stub. You can use your paycheck stub to estimate, but it's not going to be exact. Just be aware of that. So your income from a W-2 job, and then your profit, not your sales, but your profit from your business. So, one of the things I should have discussed with you and didn't discuss was depreciation. All those assets that you bought, the filing cabinets and the desk and the computers, you get to depreciate those. So you have a depreciation expense that isn't on your P&L. Most people don't know how to take or calculate that expense. I don't know how to calculate that expense. It depends. Well, I do, but it depends on what it is. Whether it's a car, or whether it's a filing cabinet, or whether it's a trailer. It depends on what it is as to how it gets depreciated. So that has a bearing on what your profit's going to be for your company. So you've got your W-2 income, and then your profit from your business. And then other things you have to take into account is if you have children, if you are itemizing, if you're not itemizing, if you are married filing jointly, or if you're single, that has a bearing. Your standard deduction for 2019 for married filing jointly was $24,400, $200. I don't remember exactly, but it was $24,000. I think it's $24,200 for married filing jointly, standard deduction. So that gets subtracted off of your income before taxes are calculated. If you had children, and any of those children were under the age of 17, for any child under the age of 17, you have a $2,000 child tax credit that you get to take off before taxes are calculated. So you can see why this would be a difficult thing to do, to calculate what percentage you should be holding back for your taxes. I tell most of my clients, and it varies because my clients are in a lot of different tax brackets, most of my business clients, I tell you need to be holding back at least 15% for federal and at least 10% for state. And I know that's 25% of your money, but it's 25% of your profit. So you can do it after the expenses come off, not 25% of what you're bringing in, but 25% of what you're making after you've paid your expenses. So, so there you go. There's some discussion about business and taxes. Anything else you'd like to talk about? Sales tax, payroll taxes, any other specific questions you have or anything about that? Wow, you know, this goes a lot quicker when nobody's interrupting me. I should have had about 20 more minutes of stuff to talk about, huh?
Yeah, I mean, if you want to just maybe touch base on a couple of those other subjects, I'm sure sometimes, you know, I would like to know a little bit more about that myself. Sometimes people don't always like to ask questions, but I would like to hear it. If you just touch base on those, that would be good.
Okay, all right. So let's talk about sales tax first. Sales tax is based on how much sales tax you collected, obviously, but when you pay is based on what your tax liability is. So you can be monthly, you can be quarterly, you can be annually. If your sales tax is monthly and you pay it on time, which is by the 20th of most months, then you get a 2% timely payment deduction that you get to take off. It's due on the 20th of the month, except for the month after the end of the quarter. So if you're paying monthly, you're paying February 20th, March 20th, April 20th, January, February, March 20th, April 30th. Because January, February, March is the first quarter. So you pay January and February and March. March is due by the 31st of April. And it's that way for every quarter. If you're paying quarterly, it's just due at the end of the month after the quarter. So April 30th, July 31st, October 31st, and then January 31st for the end of the fourth quarter. If you're annual, then it's just due by the end of January 31st. Sales tax is calculated by taking your sales and you are subtracting your non-taxable sales, and the difference leaves you your taxable sales. And then it's whatever your tax rate is. Here in Fulton right now, it's 9.225%, I believe, since they just changed that in April. If you're outside of city limits, it's less than that. If you're in a different city, you'll have a different tax bracket. All of that information can be found on the Missouri Department of Revenue website, and they break it down by every time they change it, which is all the time. So they give you, you can do it, you can look at it on a PDF, you can look at it on an Excel spreadsheet. They do it by city, they do it by county, and they do it by quarter. So, or whenever the change takes place. So they have stopped notifying their clients that a sales tax change is coming. So you just have to know that there's been a sales tax change in your area if you are filing your sales tax on paper, which is a voucher that they send you. I would recommend, and they recommend also, that you file your sales tax on My Tax Missouri, which is their website, because when you do it that way, it calculates the correct tax rate for you. It also, if you have if you, for some reason, you didn't get paid on time, it will calculate your interest and penalties for you when you do it that way. So one thing I do like to caution clients about with sales tax is make sure you're keeping that money back. It's real quick and real easy to get in trouble with that. And they don't mess around with sales tax. If you're not paying your sales tax, they'll come get it. So yeah, you want to make sure that you're staying compliant with that. That's all I can think of that you need to know about sales tax. If you don't have the login for My Tax Missouri, you should go ahead and get that done. It's real simple and it's easy to do, and it shortens how long it takes you to do your sales, to submit your sales tax and pay it. And since I know the online payment fee is 50 cents, which is less than a stamp now. So it's cheaper even to pay it online than it is to pay it by mail. Payroll taxes. Payroll taxes are kind of a slippery slope. It depends on a lot of things as to what your payroll taxes look like. There are 4 payroll taxes that you need to be aware of. There is 941 tax, which is your federal withholding, your Social Security tax, and your Medicare tax. Federal withholding is paid by the employee. Social Security is paid half by the employee, half by the employer, and Medicare is paid half by the employee and half by the employer. Those are paid through EFTPS unless your tax liability is below a certain amount, and then you can pay it with your quarterly form that you have to file. The second tax is the federal unemployment tax. That is a Form 940. The federal unemployment tax is paid through the EFTPS also, unless, again, you're under a certain dollar amount, then you can pay it with your annual filing. The EFTPS setup is easy to do. You just have to wait for them to get back with you, but they do within about 10 days get back with you. And then once you have that set up, it's very easy to pay your taxes online. So those are the 2 federal taxes. Then you have 2 state taxes, which are the Missouri withholding, which is your state withholding, and then the state unemployment tax, which is the Missouri withholding is paid by the employee. The state Missouri unemployment tax is paid by the employer, and that is dependent upon your tax rate. The beginning rate for a new company used to be 3.51. I don't know if I think I read something recently that they changed that, so it might be a little bit different than that now. But your rate is dependent then upon if you have anybody file an employment on you. So those taxes, depending on your tax liability, which means depending on how much you owe for those taxes, which means depending on how high your payroll is, are due either monthly, quarterly, or annually. The EFTPS payments are in some cases can be due semi-monthly as well. And if your payroll is high enough, if your liability is high enough, you may have to pay next day on those. But those are very large. You have to have like $1,000 of tax liability to pay the next day. Semi-weekly, I do have semi-monthly. I do have a couple of clients that have to pay semi-monthly just because they have enough employees that their liability is large enough for that. So EFTPS is either semi-monthly or monthly or quarterly or annually. I don't know anybody that's paying EFTPS annually. I'll tell you that now. Everybody's quarterly, if not monthly or semi. In addition to paying your payroll taxes, you have to file forms for the federal and for the state. The federal especially, you have a Form 941 that reports what your tax liability was, and then they compare it to how you paid it to make sure that you paid it on time. And so that's quarterly. And then you have the Form 940, which is your federal employment, and that is annual. That can be, that is due to the IRS by January 31st, after the end of the year. And again, they're just verifying that you paid your taxes when you were supposed to. The Missouri 941 is a quarterly, and that again can be paid on My Tax Missouri. And when you pay it, you're filing the tax at the same time, so you don't have to mail anything in, which is nice. Again, if you pay it timely, you can get a 2%, 1%, or 0.5% deduction, depending on how much payroll liability taxes you have paid. Most people stay in the 2%. I have, again, a couple clients that fall out of the 2 and go into the 1% after they've paid so much money in. The Missouri unemployment is filed online as well. And when you file that online, you are filing the form also, and that is quarterly. That's with the MoDES. Not difficult to get any of these things set up. Maybe a little confusing to fill out the paperwork to set them up. That's something that any tax preparer or bookkeeper or accountant can help you with for a fee. I see that we have people dropping off left and right, so they're tired of taxes. Is there anything else that I haven't covered that anybody would like to know about? No? Okay. Shane, anything else that you would like to know about?
No, I think you covered everything pretty good. We really appreciate you doing this for us. And I'm assuming if anybody would have any questions about anything you've talked about, they can get a hold of you. I will make sure, and if you will send me some of these handouts, I'll make sure that they get emailed out to all the participants.
I will, absolutely. And I will also,
and
if anybody has any questions and wants to contact me directly, I will be happy to answer any questions for free, for time. My phone number is 573-642-1800. Leave a message for me and I will call you back as I can. If you would prefer to send me an email, that is fine too. My email is Diane, DIANE, @proactfinancial.net. It's PROACTFinancial.net. That's my plug.
okay. Well, if nobody else has any questions, we appreciate you doing this. We got your information out. Make sure and send this. We are recording this. We will post this on our YouTube page. The Chamber does have a YouTube page for people to reference it if they have any questions or want to go back and listen to something. And then I believe next week we're going to have a legal aspect webinar. So hopefully everybody who is on here will send me an email and let me know if you want to join that next Wednesday, I believe at 5 o'clock. So we appreciate your time and everybody have a good evening.
All right. Thank you, Shane. Thank you, everyone, for joining.
Thank you, Diane.